Ladies and gentlemen, the truck market just changed forever. Overnight, Ram delivered a shock announcement that nobody saw coming. Not Ford, not Toyota, not even the analysts who study this industry every single day. The reveal hit the auto world like a tidal wave, instantly shaking the entire truck segment. Insiders are already calling it the Ford-Toyota disruptor, because this single move triggered a chain reaction that forced every competitor to reconsider their pricing strategy, their production plans, and even their long-term business models. The heart of the bombshell, Ram just slashed prices across the board. The 1500, the 2500, and even their EV lineup. Nobody expected just how deep these cuts would go. We're talking dramatic price drops that instantly made Ram trucks thousands cheaper than last year's models. Some trims are now priced lower than they were before the pandemic era surge. Analysts say this isn't just a sale. This is the opening shot of a full-blown truck price war that could reshape the entire market. And make no mistake, the competitors are already sweating. But behind the scenes, there's a very different story. And it's not as triumphant as Ram wants you to think. The real reason Ram is making this move is because the brand is under pressure like never before. Sales data over the last 18 months shows Ram losing ground in key markets they used to dominate. Inventory is stacking up at dealerships, pushing some lots to near capacity levels. And with Ford tightening its grip on the half-ton segment, Toyota pushing hard with the Tundra, and Tesla squeezing demand with the Cybertruck, Ram had no choice but to make a drastic move. This wasn't just strategy, it was survival. And speaking of survival, that brings us to the 2026 Ram 1500 overhaul, the redesign that forced the entire industry to stop and pay attention. The new powertrains, including the Hurricane Inline 6, are rewriting Ram's engine lineup and phasing out the legendary Hemi. Meanwhile, rumors of a hybrid variant and new updates to the Ram EV lineup are creating quiet excitement among insiders. Towing capacity is up, tech upgrades are significant, and for the first time in years, Ram is positioning this truck not just as an upgrade, but as the model that decides whether the brand thrives or collapses. That's why many are calling it Ram's survival model. But all of this is happening in the middle of a broader meltdown that nobody saw coming. The great truck price collapse of 2024 to 2025. Rising interest rates have crushed affordability, and falling demand has created a massive backlog of unsold trucks sitting on dealer lots across the country. Many dealerships are reporting inventory numbers they haven't seen in over a decade. This put Ram in an impossible position. Either wait and watch sales sink even further, or pull the emergency lever and drop prices now. They chose the latter, and the industry will never be the same. And now, Ram's move is about to force every competitor to respond. Ford is already rumored to be preparing another round of F-150 price adjustments to stay competitive. GM insiders are whispering about potential delays or discounts to the upcoming Silverado refresh. And Toyota, they can't afford to ignore this, especially with the Tundra still fighting to gain ground. We're witnessing the start of a new chapter in the truck price war, one that will drag every automaker into the battlefield, whether they like it or not. Meanwhile, Ram's EV strategy is quietly shifting behind the curtain. The Ram Charger and the 1500 REV are now playing a much bigger role in Ram's plans than originally expected. With EV demand cooling and the market hitting a slowdown, Ram is trying to position its electrified lineup as the middle path, and something between full electric and traditional gasoline. Price cuts could give these models the breathing room they need to survive the EV downturn, but many insiders are asking, is this a desperate gamble, or the genius move that keeps Ram alive? And the ripple effect isn't stopping at new trucks. Used truck prices are getting hit just as hard. Used Ram 1500 prices are falling faster than almost every competitor, and this is creating chaos in the trade-in market. Owners who bought during the price peak are suddenly finding out their trucks are worth thousands less than they expected. Dealers are struggling to balance their used inventory, and analysts warn that if this continues, we could be looking at a broader used truck market correction, or even a crash. Industry insiders are already sounding the alarm. Many say this is the beginning of a new truck economy, one where prices finally normalize after years of insanity, where automakers are forced to compete harder than ever, and where buyers finally begin to regain control. But with 2026 bringing new models, new regulations, and new economic uncertainty, nobody can predict exactly how deep this shift will go. What we do know is that Ram's bombshell move just set the tone for the next era of the truck market, and as the dust starts to settle, the big winners and big losers are already emerging. Buyers are walking into dealerships and saving thousands, in some cases more than they ever expected. Dealers, however, are reporting a very different story. Even with discounts, some lots still can't move inventory fast enough. Meanwhile, automakers are being dragged into a pricing battle that could reshape their profits for years to come. As this pricing earthquake reverberates across the industry, Wall Street analysts are scrambling to understand just how far the fallout might spread. Some predict Ram's aggressive cuts could slice into profit margins not only for Stellantis, but for Ford, GM, and Toyota as well. Investors hate uncertainty, and this move introduces a lot of it. If Ram's gambit pays off and boosts sales, competitors will be forced to match or beat these prices, triggering a race to the bottom that no automaker wants. But if it fails and the discounts still don't move enough inventory, it could expose just how fragile the truck market truly is, especially with production levels still high and demand falling faster than expected. Meanwhile, inside Ram's own engineering and product teams, the pressure is enormous. The 2026 Ram 1500 redesign has suddenly become more than just a refresh. It's a lifeline. Every update, from the new Hurricane engine to the revised towing platform and the reworked interior tech, must deliver. Engineers know the stakes. This model needs to convince both loyalists who love the Hemi and new buyers who are cross-shopping hybrids and EVs. If Ram gets this wrong, they risk losing yet another year of market share, something they simply cannot afford as Ford and Toyota tighten their grip. The redesign isn't just about innovation, it's about survival in a market that's eating weaker competitors alive. Behind the scenes, dealers are voicing concerns that the price cuts, while helpful for clearing current inventory, could create long-term headaches with depreciation and future resale values. When new trucks drop in price, used models typically follow, and fast. This is already happening with Ram 1500s, causing trade-in values to sink at a pace many dealers haven't seen in years. Some owners who financed trucks at pandemic-era prices are now finding themselves underwater on their loans. The trade-in gap is widening, and dealers worry it could discourage people from upgrading, even with the discounts, creating a cycle where sales stagnate despite aggressive incentives. But while the industry wrestles with chaos, truck buyers, especially those who've been waiting for prices to come back down to earth, are celebrating. Families, contractors, small business owners, and everyday drivers are finally seeing deals that seemed impossible just a year ago. Ram's move has cracked open the door to real affordability in a market that was spiraling out of reach for many. That's why some economists argue this might be a healthy correction, one that brings truck prices closer to what consumers can actually afford in today's economy. If Ram's cuts force other brands to follow, this could be the beginning of a long overdue reset that benefits millions of buyers across the country. Still, the big question remains, how far will this go? If Ram continues to struggle with inventory and market share, more cuts could be on the way. That would put even more pressure on Ford, Chevy, GMC, and Toyota, brands that have, until now, avoided the deep discounts that defined the pre-pandemic era. But with rising interest rates and tighter consumer budgets, even the strongest players might be forced to bend. Insiders say the next 6 months will determine whether this is a temporary dip or the start of a multi-year pricing revolution that reshapes how Americans buy trucks. And the timing couldn't be more dramatic. The EV slowdown is hitting at the same moment the gas truck market is destabilizing, creating what analysts are calling the perfect storm. Ram's EV roadmap adjustment, bringing more attention to the Ramcharger range extender concept and refining the 1500 rev strategy, signals that the company is trying to hedge its bets. They want to appeal to EV curious buyers and traditional truck fans at the same time, but whether that's brilliance or desperation depends entirely on how well these models sell once the dust settles, and whether the price cuts are enough to get hesitant buyers to take the leap. At the same time, financial analysts are warning that Ram's sudden cuts could trigger an unavoidable ripple effect across the entire manufacturing chain. Suppliers who build components for Ram's engines, transmissions, infotainment systems, and chassis are already bracing for potential renegotiations. When an automaker slashes prices this aggressively, the pressure to reduce production costs becomes immense, and that burden almost always gets pushed downstream. Smaller suppliers, especially those relying heavily on Ram contracts, are now scrambling scrambling to figure out how to stay profitable, as Stellantis demands lower part prices to offset the shrinking margins on each truck sold. Some insiders even fear this could spark another wave of supplier consolidation, forcing weaker companies to merge or close altogether. Meanwhile, internally at Stellantis headquarters, executives are trying to project confidence, but leaked reports suggest a much more frantic atmosphere. The board is fully aware that Ram has been slipping behind Ford, Chevy, and Toyota in key markets, and the Cybertruck has stolen just enough attention to pressure the entire full-size segment. Senior leadership reportedly sees this pricing move as a reset button, a chance to break the cycle of rising MSRPs that pushed truck ownership out of reach for millions. But they also know the gamble could backfire. If demand doesn't rebound quickly enough, Stellantis might have to scale back production heading into 2026, something that would signal deep trouble for one of the company's most important brands. While all of this unfolds, a new trend is quietly emerging. Buyers who were originally planning to hold off on purchasing a truck are suddenly rushing back into the market. Social media is exploding with videos of people celebrating price drops at local dealerships. Forums dedicated to Ford, Chevy, and Toyota are flooded with users asking whether they should switch to Ram while the discounts last. This is the kind of psychological momentum Ram desperately hoped to create, a sense that now is the time, that these deals won't last forever, and that waiting even a few months might mean missing out on thousands in savings. If Ram can maintain this momentum, it could change their entire trajectory for 2025. But at the same time, there's a darker undertone brewing among longtime Ram loyalists. Many feel betrayed by the discontinuation of the Hemi, frustrated by the rapid shift toward inline-six and hybrid systems, and worried that their truck's resale value just nosedived overnight. For these owners, the price cuts don't feel like a gift. They feel like a warning. They're asking, why did the value of my truck just drop this fast? What aren't they telling us? That anxiety could become a major challenge for Ram's brand identity going forward, especially if owners continue to see their vehicle values decline in the used market. Over in Detroit, Ford and GM strategists are now having emergency discussions about how to counter this unexpected escalation. If they keep prices high, they risk losing customers to Ram's bargain positioning. But if they cut prices too quickly, they could spark a domino effect that harms the entire industry's profitability. Toyota, which rarely engages in large-scale discounts, is monitoring the situation closely. If Ram's price war begins pulling potential Tundra buyers away, they may have to break their own long-standing resistance to cutting truck prices. In other words, Ram has forced every brand into a high-stakes chess match, one in which even a slight misstep could cost billions. And looming over all of this is the broader economic landscape. Interest rates remain painfully high, monthly payments are still out of reach for millions of Americans, and consumer confidence is shaky. Ram knows this. They also know that if they don't do something drastic now, they risk losing an entire generation of buyers to cheaper alternatives, smaller trucks, or even used models that offer better value. This isn't just a price cut, it's an attempt to rewrite the rules of truck buying at a moment when the entire economy is shifting under everyone's feet. At the dealership level, sales managers are beginning to see a split between two types of buyers: those who view Ram's new pricing as a rare opportunity, and those who treat it like a warning sign. The first group is showing up with printouts from Ram's website and spreadsheets comparing old MSRPs to the new ones, eager to lock in a deal before prices change again. The second group walks in cautiously, asking pointed questions about why the cuts were so steep and whether more discounts are coming. This hesitation is creating a strange dynamic where dealerships are offering some of the best prices in years, yet still struggling to convert every customer who comes through the door. It's a reminder that even massive discounts can't fully overcome the uncertainty surrounding the auto market right now. At auctions across the country, used truck dealers are seeing the effect of Ram's decision almost immediately. Trucks that used to sell within hours now sit for days. Wholesale bidders are lowering their offers, anticipating another round of price drops. Many smaller dealerships, especially those specializing in used half-tons, are reconsidering their entire inventory strategy. With Ram 1500 prices falling faster than any other mainstream full-size truck, they worry about being stuck with vehicles that depreciate before they even make it to the lot. lot. This kind of instability hasn't been seen since the post-2008 downturn, and it's sending shockwaves through the used car ecosystem. Meanwhile, consumer behavior is evolving in ways automakers didn't expect. Buyers are becoming more strategic, more research-heavy, and more patient. The days of rushing into a dealership and paying whatever the sticker says are fading fast. People now monitor price drops like they monitor stock charts, waiting for the perfect moment to strike. Ram may have unintentionally trained customers to expect volatility, and once buyers taste lower prices, it becomes incredibly difficult for any brand to raise them back up. This is part of the reason Ford, GM, and Toyota are nervous. If the market resets around lower MSRPs, their entire pricing model for 2025 and 2026 could collapse. And it's not just American buyers reacting. International markets are watching closely. In Canada, Ram dealers are begging Stellantis for similar price adjustments as inventory piles up north of the border. In Mexico, where the Ram brand is extremely strong, distributors worry that US price cuts could undermine their own pricing structure. Even in overseas markets like the Middle East, where full-size trucks enjoy strong demand, buyers are starting to ask why they're paying more than Americans. Ram has unintentionally created a global pricing imbalance, and correcting it won't be easy. Inside engineering teams, the rush to finalize the 2026 Ram 1500 updates has become more urgent. Product planners know the eyes of the industry are on them. If the refreshed models don't deliver a major leap forward in performance, efficiency, and tech, the brand could find itself stuck with the worst possible combination: lower prices and weaker demand. Early reports suggest Ram is pushing hard to improve towing numbers, refine ride quality even further, and double down on cabin luxury, areas where the brand historically excelled. But with development costs rising and profit margins shrinking from the price cuts, engineering teams are under immense pressure to deliver more with less. Meanwhile, the EV portion of Ram's strategy is teetering between opportunity and risk. The Ram Charger, with its gasoline-powered range extender, is gaining interest from buyers who aren't ready for a full EV lifestyle but want better fuel efficiency. The fully electric Ram 1500 REV, however, faces the same uphill battle as every other EV in the market: high prices, range anxiety, and slowing demand. By cutting prices on gas and hybrid trucks first, Ram may have inadvertently made its EV lineup feel too expensive by comparison. Unless Ram adjusts its EV pricing soon, the gap could become a major problem going into 2025, especially as Tesla's footprint in the truck market continues to grow. And beneath all this, a deeper question is emerging: has the entire truck market been overpriced for years? Many industry veterans now admit privately that the run-up in truck prices from 2020 to 2023 was unsustainable. The market was inflated by shortages, speculation, and unprecedented consumer demand. Now that reality is catching up, Ram's move may simply be the first domino to fall in a long overdue correction. If that's the case, we may be looking at the beginning of a structural shift in the auto industry, one that redefines what a full-size truck should cost in America. As the market adjusts to Ram's historic price cuts, ripple effects are beginning to hit other parts of the industry that most consumers don't even think about. Insurance companies, for example, are watching truck values dip at an unusually fast pace. When new vehicle prices fall sharply, insurers must reevaluate their replacement cost calculations. That means Ram owners may see sudden shifts in premiums, some dropping, others rising, depending on the model year and depreciation rate. It's a messy, complicated side effect of the price war, and it's already causing confusion among policyholders who don't understand why a truck they bought 2 years ago has suddenly lost thousands in value. Analysts warn that if depreciation continues accelerating, insurers may adjust payout formulas again, making it harder for owners to recover full value after an accident or total loss. Meanwhile, the fleet and commercial truck sector, one of Ram's most important customer bases, is reacting swiftly. Construction companies, municipalities, and private contractors are taking advantage of the lower prices to refresh aging fleets that were too expensive to replace during the inflation spike. Some commercial buyers are placing bulk orders again, something that had slowed dramatically over the past 2 years. This sudden surge in fleet interest could give Ram a crucial cushion in sales numbers, but it also raises a new concern. If too much inventory gets absorbed by fleets, the used market could be flooded with commercial trucks in 2 or 3 years, creating yet another wave of price volatility. At the same time, Ford, Chevy, GMC, and Toyota are gathering real-time data on buyer behavior, trying to predict how fast Ram's momentum will grow and how quickly they must respond. Executives across Detroit and Japan know that remaining passive is a dangerous game. If Ram captures even a temporary surge in market share, it will weaken their position heading into the critical 2026 model year, where all major brands are planning significant refreshes or powertrain changes. But by reacting too aggressively with their own price cuts, they risk cannibalizing profits and triggering a financial rut that could spill into R&D budgets. Some insiders worry that a prolonged price war could delay future electric trucks, hybrid systems, or new engine platforms simply because the money won't be there to fund them. Quietly, analysts are warning about another problem brewing beneath the surface: consumer fatigue. After years of record-high vehicle prices, supply chain issues, rising interest rates, and now wild swings in truck pricing, many buyers feel overwhelmed. People don't know whether to buy now, wait for more cuts, or hold on to their existing trucks for longer. This uncertainty alone can freeze the market even during a period of aggressive discounts. If consumers decide to wait for even deeper cuts, Ram's strategy could fail entirely, leaving dealers drowning in inventory despite lowering prices. It's a psychological tug-of-war that could shape sales trends more powerfully than the discounts themselves. In social media circles, a new narrative is taking hold. Trucks are finally becoming affordable again. Videos are spreading where creators compare old prices to the new cuts, react to MSRP drops, and highlight deals rarely seen since the mid-2010s. This online conversation is giving Ram a surprising advantage. Free marketing, fueled by shock value. Even buyers who have no brand loyalty to Ram are starting to include the 1500 and 2500 in their shopping lists simply because the deals are too significant to ignore. However, if this digital momentum turns into expectations for constant discounts, Ram and other manufacturers may struggle to ever raise prices again without backlash. Dealers in the meantime are reporting something unusual. While foot traffic is rising, buyers are negotiating harder than ever. Many come in expecting thousands off the sticker price, even on top of Ram's official cuts, forcing dealerships to sacrifice margins they desperately need to stay afloat. Sales managers complain privately that the customer mindset has completely flipped. The leverage is no longer with the seller. In some regions, dealers have already begun offering loyalty incentives, accessory packages, or extended warranties at reduced costs just to close deals. It feels like the early stages of a new era where truck prices will be driven more by competition and buyer willingness than by the automaker's preferred pricing strategy. And while all this plays out, Ram's leadership is keenly aware that this moment might be their last shot to reclaim relevance before the next wave of electric and hybrid trucks reshapes the industry. Stellantis executives consider the next 12 months a decisive window, one where Ram must prove it can adapt to a world where customers demand performance, tech, efficiency, and affordability all at once. The pricing bombshell may have bought Ram time, but it did not solve the underlying challenges. The brand is racing to reposition itself before the entire truck landscape begins another transformation driven by new regulations, new competitors, and shifting consumer priorities.